anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everyone, what's happening? How we're doing? Happy Thursday. Happy post-Fed day. Markets up a little bit. We had a gap lower down to about 560, 261 on the SPY. It's climbed back up to fill the gap. We're just shy of yesterday's highs. I'm looking at taking possibly a little butterfly spread into tomorrow's expiration. See if we get up into 573. It's a little bit wide, but hopefully something I can catch. If I don't think this necessarily lasts all day tomorrow. I'm honestly contemplating changing this expiration down to the 20th, which is today. And we're kind of outside of the expected move if we get there. But let me see what this looks like. If I go to 573, either 2 or 3 wide. So it cost me 30 cents to do that today. If I go 3 wide, it's going to cost me 60 cents. That's just outside the expected move. Son of a biscuit. I mean, that would be a pretty good run to the upside. We go 562 to 572 or 573. It's a pretty good directional move. Let me see if by tomorrow we get there. So 573. I was just looking at this trade with one of my other services, and I don't mind the setup. So I can do a 2 wide for 23 cents. I go 3 wide for 48 cents. This does capture some of that move tomorrow in case we don't fully get there today. But question is can I turn this into profit by today? We're going to find out. But we've already exceeded the expected move on the day for SPX. Market makers were looking today about a $44 move, and it's already been decreasing a little bit. I've got a sell side at 57.10 and a sell all the way down here at 55.85, which is mostly in profit right now. So I'm just going to hang out a little bit longer and see how the day plays out. A couple things on the technical side. Let's go to the 15-minute time frame. So I'm just curious on how this little high to low plays out. We have to get through. This is, I believe, this week expiration for tomorrow's a triple witching. So you have volatility expirations, you have index expirations, stock expirations, all on Friday. Next week, you go in towards the end of the final Friday expiration of the month, which is the 28th, and then you end the quarter on the 31st, which is Monday. And then you have April, April 2nd, a big tariff looming talk, whatever. So I just wonder if this market coming into tariff talk in April is going to be sitting pretty much right in the middle of this decline. So if you can see my fibs on here, from this high to this low, if we're going to end up pulling back right around this 50% zone before we go into the next round of tariff conversations or headlines or whatever you want to call it. So on a positive note right now, the Fed did start pushing some price back to the right side of the trend line. Okay, we had our little rally from Thursday, Friday that pushed up here. Okay, Monday we started out with a high. We gapped lower Tuesday, put in a bit of a floor around that 560 level, 5600 level. And with the Fed yesterday kind of inching up the highs, you can look at the futures market today. It's also been, a little bouncy. We've gone kind of all over the place. So, on the right-hand side of the trend line, which is what I'm really looking for, you go back to where this move started, connect these highs, you have resistance here that's been broken. So is it possible that the bulls, after testing the trend line, now breaking the trend line, are they able to get into some open space? If the bulls get into open space and break these highs, that's fine by me. So I'm going to take a trade here. I don't love this trade, but if we get there today, it pays out pretty nicely. So if I go March 21st and buy butterfly, it's probably easier. Butterfly is going to be tough to trade if I pin. Cost me $1 if we get to 573 today. Okay. Can we get there? I think we can. Come on. If I buy this and it turns red, I'm going to be pissed. So I'm thinking of buying this 572 or 573 call, and I'm looking to see if price will get up to my 573 strike. This has been growing since yesterday. This was around 1100 to 1200 net, and now it's at 1800. So, flows are certainly coming in to try to get price to push up to that level. Expiration is tomorrow. If we, try to make a high on the week, we can certainly get there. So let me see. I'm going to toss a 572, 573 call. And can we get there by tomorrow? If we get there by today, it'd be even better. I'm going to wait. I don't know. I'm going to wait. Otherwise, I'm getting excited. I'm tossing things at highs for the morning, spending $250 that might be difficult. If we pull back, that 250 all of a sudden becomes $2, and I'll just be sitting on a very quick, sensitive loss. So I'm going to hold off right now. But overall, seeing some P&L in the day, year to date's looking a little bit better. So I'll just hang in there, try to be patient. I mean, we've had zero pullbacks today outside of a pause, and that was at 10:10 a.m. So we've already gone past the expected move on the day. If we just settle in a little bit, then I can hopefully turn a nice little profit on my SPX trade. Which I mean, it's not that far off though. But 57.10 is my SPX trade, so I got to see how the day unfolds. But I'm not upset by watching this market go higher. So going back to this chart here, I've called the symmetry level, meaning this low high, higher low, higher high. That is right around 57.95. Go back to this previous low. That's right around 57, right around 57.95 or 57.80. Looking at these fibs, the 50% pullback zones around 58.20, 58.25. So I think that the market somewhere in here is, as we come into the end of the quarter and into April, this is where the bulls and bears are going to fight. I think the bulls can, try to maintain, but if we have heavy amounts of volume that come back in and defend this level, the bears can certainly claw right back and take this thing back down to the lows. So this is kind of what we talked about the last week or so. If we have a risk on move, I think I'd be pleasantly surprised to see the market go higher, and I would be fully expecting the market to come back and retest the lows. Okay. All right. So we'll see how the day unfolds. But on the right-hand side of this little trend line and a correction, not a bad thing. News-wise, things are pretty light today. I saw that President Trump is on the calendar here for 10:40 a.m. But from the looks of it, it sounds like either a recorded session or something very scripted, but it's a digital asset summit in New York via satellite. So it could just be a canned speech. We'll see if there's any headlines that stoke anything. If Bitcoin makes a run, okay, maybe. So let's just go top down and see what we have today. So we're up around 0.5% on the SPX, 0.47 on the SPY. Equal weight's up a little bit. Nasdaq up 0.62, Q's up 0.60, Dow's up 0.4. Again, all the charts look pretty similar. We had a big slide, so I just took a fib from high to low. I'm looking at this like 38. I mean, the nice thing from today is if we're getting above this 200 moving average, okay, or we can even change this. If I add in let me add a simple moving average. So I'll go simple moving average. Okay, and it gives me a bunch of them. So let me just go into the settings here. All I really care about is I'll change SMA 1 to a 200, and then I'll get rid of the other ones. So SMA 1 is all I really care about. Okay, so let me make that a little bit larger just so you can see what I'm talking about. There. How does this not extend further right? Interesting. So it just ends. Make it the same color, I guess. There. Okay. There we go. Now we got it. So now we're caught up to current price. So a couple of things. One is we're sitting around the 200 moving average right now on the exponential. So this is the exponential moving average in red, and we're sitting right at it. So a close above this 30% retracement level to me is an encouraging sign that we come back up into the 38, possibly the 50% retracement. So I think two key levels to be watching. I know this is like getting into the granular details here, but right at this EMA and right at this SMA, this would be where I'd say resistance could certainly lurk. Okay. So if we can get above this 200 EMA and we get above this 30% zone, the 382 is sitting right there with the simple moving average just slightly higher. That data point is around 573 to 574. See what I'm saying? Like we have a break of the moving averages, and so if price comes back up to test the moving averages, whether it's this one or this one, and then show a sign of rejection, that wouldn't be a huge surprise. That is the big obstacle right now for the bulls is to get back above these moving averages because for all these years, right? For all these years, we've seen this 200 moving average act as a really dynamic support level. When it's in a bull market, it is way out of the way. When it's in a bear market, it is resistance. So our 2022, we were above it and then got back below it, like it stayed in a downtrend. You can see its resistance there, became support over here, became support over here. It's been a while since we hit it, which is why we weren't surprised that we ended up going bearish and finding that corrective zone. But this is a tricky spot because if we're through it, we could pull back and just sniff it out again, find that structure, and I could see the bears flushing down again. Some content I soaked up yesterday. Some pretty smart investors that I follow talking about a potential bullish rally in a bearish market. So that's certainly flipped the landscape from cautiously bullish and cautiously optimistic into now a bull rally in a bear market. Now, whether that is true or not, I mean, one thing that can happen that not a lot of people talk about is the market can just go sideways, right? I mean, this market may not go to highs or lows. I still think that this level, I mean, I'm reading more that like, oh, the Fed put and the Trump put is way lower than current prices, and maybe it is. One thing I want to look at, and let me see if I can go. I got a screenshot up from yesterday. So, what was that trade? Oh yeah. Let's see here. I want to go S&P 12-month EPS. S&P 12-month EPS. See if that pops up on a Y chart. Hopefully I don't have to. So 75. That's not what I want. So what I'm looking at is the earnings revisions that have been happening are the reason that we're kind of seeing the markets fall. So earnings revisions, if they are going like earnings are forecasted up, but the actual S&P is up here. So having this market drop and come back into line with the forward price earnings is making sense. Like that's when you say, hey, the market's overvalued. It was, and this reality check is typically what happens. Despite all the noise of tariffs, despite all the noise with Trump and co and the Fed and the uncertainty, the reality is this market operates typically in an environment of earnings, right? Earnings are solid, earnings are consistent, earnings are growing, earnings are trending. Well, then the market should stay right around the real value of earnings. But if this earnings starts to dip lower, that's where there could be some more catch up to go to the downside. So just something to be aware of. All right, let's continue to go top down. Let me catch some comments here. Let's go to the Dow. Same thing, high to low, pulling back around that 38% zone. So 38%, 50% zone. We'll see what happens. This could be a broadening pattern on the Dow. I actually have some long positions. It's not really a broadening pattern. I guess it's a channel because we did not make a higher high there. But watching closely. But if we go, high, low, lower high, lower low, like that's a pretty scary spot to be for the Dow. If we break below, again, April lows, August lows, we break below this area, the concern is that this becomes a very real scare. That would be my next major level support. If we don't hold in this level around April lows or August lows, then we're talking this 5-period yearly moving average, which is way down here. So I just want to be aware that this market might be able to drop 19%. I want to be aware that the S&P and the Nasdaq could drop 20+%. So if we're talking like nasty legs lower, this market can slip from a 10% correction into a legitimate like 20% scare. Whether that scare is sustainable, whether it's a scare is a bear market, whether that scare is going to be a full-on recession, we haven't really felt the pain of a full everything is down, everything is bad recession, right? I mean, that was 2008. Everything was down. 2022, like stocks were down, but we had certain sectors that were resilient. And so I'm wondering if that's how this year possibly plays out, as we have kind of a rolling recession where certain things hang in there, more defensive plays, more dividend plays, more low beta plays, but we start to see just more pain on the growth and momentum side. Russell can't really catch a break. There's really strong structure in here. This previous resistance level. I do have some income plays. I think I took profit on this one for IWM, this 190 put. Let me double check that here. So 190 on IWM. Yep. So I've got a May expiration right now. Son of a biscuit. That thing keeps growing. Are we getting there today? I don't know. I just keep looking at my other chart. Like, I think we might just get to this 573 handle. Anyway, out to May of 190 on the Russell. JD, I rolled this one. This is now out to May for another credit. It's fine. And then naked puts are fine. Okay, let me see if I have any expirations on the Russell here. So if I go IWM, April, May for everything, that's not a big deal. I do have some expirations I need to take a look at. So I've got SPX on a trade today. Let me check and see. I think I've got a daily profit play looking pretty good. So this one is showing profit. This one is showing profit. Choices. I've been in the trade for about 17 days. It's just around the halfway point. If we can hang in there for the week and weekend, this trade and this trade are looking pretty good. This one's already up $40, $50. This one's positive as well. I might just take the small winner. So I got into this one for $5 credit. Let me see if I can close this one out. So $65 here. It's not a huge profit. 65 out of 500. So that's a 13% take profit on that one. Let me see if I can close this one out. So if I close this for like 435 or less, trading at 445. All right. I'll let that one go a little bit longer. Okay, what are those 0 DTs I have today? All right, so SPX, Tesla, we're at 236 and change. I may be taking an assignment on Tesla. It's a 111 trade with an assignment price of 255. If I get assigned, which I will if it's below 255, which is probably the case for tomorrow, I will have some shares of Tesla. This is going to be this is going to be a pretty classic lesson in options where I'm willing to take the assignment on the underlying and then I use options to lower my cost basis. I'm going to own Tesla around 247. I'm going to sell premium to lower my cost basis, hopefully by another $10 or more. If it gets called away, I'm looking to turn it into an income trade, not necessarily a long-term hold because I have other income trades. So I'm just going to use the capital, try to get it called away. I'm debating on whether I just sell a covered call and lower the cost basis or I put in a collar trade and have downside protection in case we're going to flush lower again. So the way this would work would be, here's an example on the account. It would be, I sold some premium on Tesla there for, this one is actually just a wide credit spread. So this one is a wide bull put spread. So this one is 6 wide. I collected $5.40. That's an income trade. But the trade that I'm looking at for this week is right here. So the trade is for $2.17. If price is below 255, I'm going to take the assignment. So the way this trade works is I have a $5 profit trap, 255 assignment, and I collected $2.17. So I did that. So 255 minus 5 minus 2.17 there. So 247.83 is my break even. If I get the assignment going into next week, and it's very likely that I do, then I'm looking out for maybe a week. I'm not trying to mess around here. I'm going out maybe a week or so selling. I mean, an at the money would be around $10 to $11. I can repair the trade pretty quickly, or I can sell a break even or better and still get probably $4, $5, $6 on the trade. So go from a 247 break even to about a 240 break even. And if price gets back above it, it's income. If price gets, if price goes lower, that's why I'm debating whether or not I put on a collar trade, which would be I sell a covered call and I buy a put. And if price goes down, at least I have some protection. But to do a collar trade, I'm going to go out a little bit farther as opposed to just a covered call. I try to sell some premium, week to week. Okay. All right. So that could be happening here, over the weekend. Let's go VIX. VIX continues to drop and sell off, which is encouraging for the near-term correction. This 4 to 14 day average is now, I think, 7 or 8 candles in. So 1, 2, 3, 4, 5, 6, 7, 8 candles, I believe. 1, 2, 3, 4, 5, 6, 7. So 8 candles in. Okay. So if we're going to continue to push a little bit lower in volatility, that's a good thing. Settle back in, where? Do we settle back into like 17, 16, 15? I'm fine with that. If the market recovers, we could be anticipating maybe some higher volatility in the coming weeks. VIX 1 day. I mean, this is a pretty nice sign to be down on the VIX 1 day, showing that we're getting some bullish direction here. Okay, I hate to take this trade, but I think I got to take a stab at it. So March 21st, are we getting to the 572? Gosh, it's so tempting. All I'm debating is if I just buy a call, that 250 is now trading for 290. 240, so it's up, 30, 40 cents right now. But I'm chasing, man. I'm not going to take the trade. I'll just complain about it later. SVXY, the trade I looked at last week in SVXY when we were sitting at like a 28, 29 VIX, I was looking at selling some premium SVXY. The only reason I didn't is because even on my margin accounts, it wasn't treated any better with margin at all. It was treated like a pure cash account. And so I didn't want to see, any type of volatility event that maybe spikes this thing down. The premium's not all that great. So anyway, it is responding nicely. The VIX is dropping and the SVIX or SVXY is going up, which is what I was looking for. So it's up a few bucks. I was considering is just selling some puts on it. Dollar index, dollar's actually up. We did see a Swiss National Bank cut last night. Let's go currency strength. So we have Aussie New Zealand weaker. We've got JPY and dollar stronger. We've got some volatility today. Big move in the Aussie New Zealand. Are we getting a dip in China today? I'm just curious where that's coming from. But this is going along with what we talked about in the currency market with the dollar index. Is you have these 3 very aggressive candles, and I saw this as an inefficiency. So if you're near term long the dollar, and I mean like very near term, like you're getting the trade to cooperate. Now, coming back into this candle area, I would say if the dollar comes back into this area here, then it looks like a good opportunity to look for a confirmation to then start to sell. So you take this down to a smaller time frame, which I'm going to go ahead and hide that 200 moving average simple. There's my 200 EMA. Now go down to a smaller time frame. Okay, we are now back above the 200 moving average on the 1 hour chart. So if we're going, back here, this is the inefficiency candle on the daily. So if we go up through that and start to then roll over, I look for a sell trade, stop above, either stop just above this U-turn or even a stop above the trend line, and then see if we can make some fresh lows on the dollar. Okay. Oil is hanging in off those lows still, a lot of chop. I actually did want to look at a trade today on oil. I mean, I can price it out. I don't know what the risk scenario is going to be, but I'm going to price this one out. So I'm going to go /CL for oil futures. And how far out? So I can go out to 27 days or 56 days. Well, that's a big difference. Let's find out. So if I do a 111, so if I buy, let's say, a 65 by 64, then how much lower can I go? I'm gonna have to go way lower. Let's see. 61 by 60. I mean, that's a profit trap of 430 bucks. This one I could live with. So a 61 by 60, 50. And then I could do like a 55 by 51. Nope. 6 cents credit. Let's see if I can go a little bit lower. So I make $100 also with a profit trap. Well outside the expected move. That'd be a 7 delta. There's a 96% chance of profit in this one on May 15th. Risk is $4,000. It's about a 2% risk. Buying power is not too bad, only taking up $922 in the futures market. If we saw a push lower in oil, I mean, right now CL's trading around 60, 67.89. We'd have to see a pretty aggressive slide. We'd have to see oil down, 11.5%. That's certainly noteworthy. And then my 55 would be the strike. That's at least worth $100. I don't love it. Not a terrible trade. Certainly not a lot of buying power, but I don't know. I mean, seasonality wise, oil should be bullish. If we go back to like May's and June's, usually oil. I mean, if there's demand for it, we're going to see some resiliency. So I don't know. I just don't love it. I think it's a good trade. $55 is probably hard to get to, but if we do break that floor, I mean, all this consolidation could be a breakout. So this is my concern on oil, is that we have all this support and these lower highs. But if this thing breaks out, this thing goes, down pretty aggressively. And I don't want to be stuck here saying like, oh yeah, it's a good trade. And then the volatility picks up because we've had super tight trading ranges on oil. So I'm just going to stay out of it for now. Gold, 30.39. This is a high from yesterday. I still think gold is overextended in the near term. I'm not saying I want to short gold. I'm just saying I want to see a pause or a pullback. I want to find some dynamic support in here. We have stretched away over 15% from the 200 moving average, which is pretty high. You go back to any time in history, you don't see a lot of those moves that's that high of a percentage. I think the most I've seen is about 18 to 20%. So we could still have a little bit of a drift, but I drew this fib out yesterday. I thought this was interesting. If you go from this breakout point in 2018, take a swing from low to high, okay, and that projects up to a finished 618 extension up here, and then you have another fib from this low to this high. Well, we had a very shallow pullback, and we're running up towards the 1.8 and a 1.27 extension. A lot of times with a shallow pullback, we don't see the prices continue to go much higher. So I could see from this low to this high with a shallow pullback, this market runs up to a 1.8127 extension and then pulls back into the same high again. So possibly a pullback into like 2,800 before we continue to go much higher. I mean, if it just continues to drift, I mean, so be it. It's freaking gold. What are you going to do? But from a technical standpoint, it's a little overextended. Based on this fib sequence, I think we have a pullback coming. We got lots of dynamic support that would be, excellent to see a bounce. So I'm still kind of waiting. I'm just kind of patiently waiting to add to my gold exposure. Silver, on the other hand, kind of same thing. Like we're making slightly higher highs. We're not at new highs on silver. We haven't made all-time highs on silver, but I'm still encouraged that we're still going to go higher towards like $35, $36. If we stay in a bit of a channel play, then there's room into the 40s. What I'm really excited about is if we get above this $36 handle, that this is open space for silver to really start to launch and maybe get into the mid to high 40s. That's ultimately my profit target. So all the positions I do have on silver, I'm looking for my SI futures position. That's looking good for profit. Let me go back to symbol here. So SI futures up about $1,000, and my SLV positions. I've got some other exposure. I've got PHYS for physical gold and silver. That's up around 28.50. I have SLV, which is up around 18 grand. So I'm still running with a pretty decent size position in silver. My gold position is up around 15.4. So I mean, gold and silver for me are still a really healthy part of my portfolio this year, and I think there's more upside in both. I'm just looking to hang in there. So that's gold and silver. Bitcoin 86 and change, looking a little bit better. IBIT trading at 48. I might also take an assignment this week on IBIT. I don't think it's this week. Maybe it is. Let me double check here. IBIT. So I have some shares. Let me check. So these are May, April, May, May. I know I have a March expiration in here somewhere. It might be on some of the new client accounts that I pulled in this year. April, May, April. This one has April, May. Here we go. Cash secured puts. So this account is from a $534 position. It's actually showing profit, and all these could potentially be assigned. I'm not going to keep the shares. I'm just going to take the profit. So 534 credit is now trading for about $4 and what, 40 cents. I'm going to just take the profit here and not take the assignment, and I'll keep this ratio spread out to April. So the nice thing is staggering in my puts like this, the 51.50, 49.48, net credit is 534, and I'm trading for about 90 bucks profit. If I don't do anything, I would actually take the assignment on the 51 and the 50. Have to tie up some capital there. I'm not going to do it on this account. Cash to me and buying power means a lot. So I'm going to go ahead and take this profit here, close out all 4 positions, and avoid the assignment. So 446, let's go 440, I'll go 450. Come on, dude. 460. Okay, just close out all 4 of those puts for $80, which is fine. And just grabbed a bunch more profit, not profit, but grabbed a bunch more buying power, which to me is most important. Most important is that buying power. So that helps me avoid the assignment, keep the cash at the ready. And I just added in another, I don't know, maybe 10 grand, because that would have been up to 400 shares with this week's expiration. I wouldn't have taken the assignment under the 48 put, but I would have been assigned 51, 50, and 49. That's 300 shares. So 300 shares at an average price of around $50. Oops. Well, yeah. So $50 times 300, it'd be 15 grand in buying power. So it's a margin account, so probably about $7,500. But still, I want the buying power. And I want the buying power because I might be taking assignment next week on Tesla. Okay, anything else on IBIT here? Same thing. This one is 1, 2, 3, 4. Let me group these together for puts. And still up some profit. I'm going to take the profit. 1, 2, 3, 4. Pulled in 536. See if I can close this out for hopefully 450 or less. 452 is the ask price. I mean, come on, guys. There we go. 452 got filled on the debit. Okay, so that was a 536. Close it out for 452. 5.36 minus 4.52. That was 83 cents profit that I just kept, and also avoiding the buying power reduction. I still have a ratio spread out to April, which I'm fine hanging on to that one. This one here, just to put out to April. And then this one, April and May. So I'm good with that. I still have a collar on the own positions of IBIT, but okay, that's good. Freeing up some more capital, some more cash. Now I'm sitting around still about 1/3 of my account is in cash, which is good. Okay, that's Bitcoin. MicroStrategy up to 306. Showing some resiliency. I'm not going to complain if Bitcoin is going to rally a little bit and MicroStrategy is going to follow along with it. Anything greater than 310, I get it called away. My break even's 263. That's not a bad win. I've got 1,500 shares of MicroStrategy. That would not be a bad win at all. It's going to be probably over 10K, I think. So if I go 310 minus 263.72, get it called away for 1,500 shares. Oh, good math on that, huh? 310 minus 263.72 times 1,500 shares. So, shnikes. That seems like a lot of capital. That can't be right. Oh, never mind. I don't have 1,500 shares. That's a crap ton of shares. I have 500 shares. Sorry. So 46.28. There. It's still 23 grand. That's a good chunk of profit on MicroStrategy for a trade that I bought at 346, lowered the cost base to 263. It obviously needs to hang in there and show some resiliency, but if it does, that's a good thing. And making a little 20 grand income trade certainly doesn't hurt. All right, let's see what happens. Any comments from Trump today? Anything happening on financial juice? Let's see. Trump issues bombshell demand for Fed. I don't even know what that means. Does anybody know what that means? Bombshell demand? Is it clickbait? Should I even click on this? Look at this garbage. Stocks plunge before the open. I mean, markets are freaking up today. Ignore the news, everybody. Ignore the news. Copper up to some fresh highs. Any pullback on copper, I'm happy to consider some more positions. We are coming up. This is the one thing I want to note on copper. This is an all-time high. So rip roaring as copper seems to be, it has never been higher. I don't think. If it has been higher, it is way, way, way back in the day, but it hasn't. Look at this. Previous all-time highs back in 2011, and then we poked during 2024, and we fell hard. But man, I mean, again, it's a pretty nice channel. I think that if we can clear these highs, then copper does have room to run. This is why I also think the whole idea of a recession and global economy crash, not even close. They call it Dr. Copper for a reason. They say it has this self-proclaimed economics degree, but copper's been ripping. So it doesn't mean I want to buy at the highs, because I certainly don't. But it means that this trade is going to expire for full profit that April expiration. I doubt we're coming all the way back to 4.20. I wouldn't mind seeing a dip or a pullback in any capacity. So if we pull back to this level, I look for a chance to buy more. Or at least establish some type of option position for an income trade. So if I do an income trade here, we get a pullback, income trade here, get a pullback, income trade here. I can just kind of follow this thing up for income trades rather than just going long the futures contract. There's obviously a lot more money to make in the futures contract, but there's also a lot more risk. Okay, Japanese yen still hanging out. Nikkei, interesting. I talked about this yesterday. The Nikkei versus FXY. This is the Japanese yen, but the Nikkei versus EWJ is actually up to some highs. DXJ up to some highs. I don't know. I don't know how this is performing better outside of it gets rid of like the bottom 20% of the Nikkei. So that's a good thing in my opinion. You're kind of taking a higher cut of the stocks. DAX, little chop suey up here. I still like DAX to dips. You know, pullbacks and dips. Dynamic support looks pretty good. FEZ, I just sold some premium. That's my way of having some exposure on the DAX. FTSE, still pretty choppy, but pretty well supported overall. Argentina, I'd love to see a pullback towards this 200 moving average. And we'll see if we get it. Otherwise, I'm not going to chase this thing. China still makes fresh highs, pulling back a little bit today. Brazil looking pretty good. My EWZ ILF trades looking pretty good. I added some exposure this week. Mags at 47. Probably a reason that we're getting a big lift today is having Mags up. And let's take a look at the heat map really quickly. So Meta is, son of a biscuit. Did Meta gap today? I looked at that yesterday, right before my fudge muffin. Well, that didn't take long. Shoot. I was looking at a bull call spread yesterday on Meta. Damn, that was fast. So it was just because we came back to the 200 moving average. I was curious if that market bounced, and sure enough. But I did get the trading yesterday before the close. But man, that was it's fine. I missed the trade. It's no big deal. Part of me hopes there's a little bit of a flush lower. So this high, this low, if we pull back again, you know, maybe having one more correction on Meta. We haven't had really a meaningful correction since literally the bottom of 2022. So having this thing go from this low to this high, if we go 236 and we pull back a little bit deeper, this is where I'm more interested in Meta. I might have to wait for that trade, but I mean, whatever. I didn't get the chance to buy it. I was looking at a bull call spread of like the 580 to 585, and it's already up $20. So it's all good. I'll see what happens up in this like midsection. Microsoft catching some bid. Got some income trades on Microsoft. This one is profit. This one is profit. And I have this one out to April that needs to stay above 370, which I think should be fairly safe right now. 370 is pretty decent. Is it in profit right now? It's probably a little bit too much time, but let's find out. Yeah, it's only up $20, and it's a $2.30 credit. I'm going to try to collect as much of that as I can. If this $2.30 is trading for, you know, 180, 190, $2 net profit, I'll look to take some profit, but I'm going to have to wait a little bit longer. I do want to see what happened on PDD. I put in a trade this week. We're at 128, and I want to see if we're above. Interesting. So earnings came out this morning. We're kind of right in the middle. I've got this expiration out to next week. So can we get to 130? My break even on this trade is around 137.50. So 137.50 is my break even, and 114.50 is my break even. Okay, so let's see if we end up tagging one of these highs or lows this week or next. If we get up into this area, that's a break even trade or better. So anything greater than 137.50, I'm going to set a chart alarm here. And this one at 114.50. Okay, Netflix 958. This is another one. So I have a couple of trades. This one's going to expire for full profit tomorrow. And then I have a broke wing butterfly up here for credit of around $1. So I'm looking to see if price will just hang out here. You know, price can go back down to the 200 moving average, which is what I think it's going to do. I just don't know timing wise, like, do we have Netflix go all the way back to the highs again before it comes back down? Or is this a spot to say you've got a flush, You got a little structure in here. Market pulls right back to it, finds resistance, and then sells back off. So this actually, let me see if I can line this trade up. I might take a bear call spread on Netflix if it's good asymmetry. So if I were to buy, maybe a pre-earnings. So I don't really want to get into the way of earnings because we got earnings on the 17th, but that's the expiration. Son of a biscuit. That's a tough one. Is it after bell? It's after bell. So is my expiration. So anyway, let me see here. If I went to the downside, if I buy a 960 put and sell, cost me 260 to make 240, cost me 492 to make 508. That's not a bad trade as far as like one-to-one risk. All I need to see is price going lower. If price goes lower, that pays pretty well. It would be out a little bit farther. It's not out a ton of time, but it's out about 22 days. If price goes down, this should be showing some profit. I mean, this 490 debit would be trading for, maybe $6. It's a max credit of 10, so it could be trading for, $6, $7, $8. But I definitely want to be out of that trade before earnings. I'm just thinking technically, if we have I don't know, this level to me seems like resistance. We still haven't hit the bar count. And maybe this is one of those stocks where it just has an excessively long bar count. Like Meta was one of the longest bar counts that I'd seen in the markets, and we're sitting around 354 bars on Netflix. Meta was like in the 500s. So Meta was not a surprise that we came back to the 200 moving average because this thing was way the heck back here. It took 530 bars. So maybe this is a bit early, although this does look like a head and shoulders to me. But one thing that happens in the stock market is you get a lot of fake head and shoulders. So we'd have to have, I'd say, the broader market and the mags, and not that Netflix is in the mags, but it's a big one. It's a FANG, right? This level, I think, could offer some resistance. I think the moving average still gets hit. So one way I can look at it is either I take the trade as I just looked at for about a $480 risk to make $500 in profit, or if it goes up a little bit higher, I look at the same thing and just kind of say I think it's going to be resistance. I could be wrong on both of the trades, but the reason I would consider looking for a short trade is because of that 200 moving average. When we sold off, heavy here, put in some income trades. When we sold off heavy here, put in some income trades, and just sticking with it for right now. All right, NVIDIA, 119. I don't have a ton going on with NVIDIA outside of some collar trades and ratio spreads, and I sold a bunch of premium. So those are the shares that I own out to May. Put. Lots of puts that I sold on NVIDIA, all the way down to $70 to $75. I think that the expected move is way overstated versus the actual move when it comes to an Ivy rank that was up into the 50s or 60s with that big sell-off we saw to now the Ivy rank at 22. Anything can happen, but just based on the options market, this is a pretty good amount of premium. So if I don't have any assignment here, that's $3.45 plus $2.53 plus $1.32 plus $1.41. So I could make $871 on NVIDIA without a single assignment. So here's hoping. Okay. Still a tough road ahead. I mean, we're on the right-hand side of the trend line. We're back to the 200 moving average. I think an important level on NVIDIA, just like the S&P and the Nasdaq, is getting back above this 200 moving average. For some reason, this little developer conference that happened didn't get the market too excited about NVIDIA. We're sitting on the backside of the trend line. This August low could be in play. This April low could be in play. These, to me, are like fair market value levels. If you take a look at NVIDIA from a fundamental screener, let's see here, nothing. Bike ramp, huh? All right. Anyway, I just saw the headline with Trump. I was trying to see what that was. It's slippery news on those little thumbnails. All right, let's go to NVIDIA. Okay, insider selling. So it's trading just below estimated fair value, which is why I think this like current kind of 110, 115 area could be pretty firm. Still trading high for price to earnings, but it's NVIDIA. I mean, the compression we've seen on NVIDIA from that 153 down to 100, I mean, that brought the price to earnings down quite a bit. This is, I think this shows some resiliency here to show that it's still trading under fair value, which is why I think if I'm selling puts at 75 and 70, that those are just going to be good income trades. Compared to some, I mean, the fact that Broadcom is 88.4, Advanced Micro Devices, AMD is 104. I mean, that's crazy. On a price to earnings and even a PEG ratio, NVIDIA is actually looking pretty good compared to its peers. ARM Holdings at 154 times earnings. That's way out there. Qualcomm, that's a little bit different. 16.7. That looks like a pretty good value. So anyway, it's going to be a battle royale, but I think this fair market value between like this 105 to 115 zone, we might just see it chop around in here until Mags gets a little bit of a lift off. Okay, what else? Tesla 235. We'll talk more about this. If I take on the assignment this weekend, I will walk through it. This is the potential trade. I'll just add to this text box, and I'll just track my break even. I'm looking to repair the stock pretty quickly on this first chunk. I've got some income trades out here. Tesla from a fair market value, I think there is still room for Tesla to slide. So we're still trading super high. I mean, this was like 130, 140 price to earnings. Now it's 106. But finding fair value in the next maybe 20 bucks. We could overshoot it, right? We could break the 200 mark. We could have that be like the big dip. That could be the capitulation. You could see, dark pools kind of loading up on Tesla for sub 200. So I'm looking at kind of hanging there. I know it's going to take some capital, but own some shares. I think this is why the protective collar might be helpful, where I can buy a put, sell a call, and have prices covered on both sides. So if it gets called away, fine. If it also goes lower, I can ride the long put down and lower my cost basis. So that may not be a bad trade in case we have another flush. So I look at, technically on Tesla, this low. I mean, this has already had a incredible downside. If we can stay here for a bit of nothing, that would be kind of good. But if we have another flush down, I think that like capitulation, if it holds, I think that'd be kind of the reversal pattern look. Is we get into like the 180s, 170s, and then we see a reversal pattern, and this gets a lot more exciting for maybe the second half of the year. Maybe. Time will tell. Berkshire Hathaway up to some fresh highs. Kind of nice to see a stock doing that, even though it is Warren Buffett, and he's sitting on 20% of Berkshire Hathaway's in cash right now. But I've got a full profit on this one coming into. I'm not going to do anything. Netflix is full profit. Berkshire Hathaway's full profit. I'm not going to short this. I'd still be looking for dips. However, I say that, and bar count wise, we have a respectable bar count, 348 bars, and percentage away. I mean, I wouldn't be terribly surprised. That's 16.45%. I'm not ready to short Berkshire Hathaway yet, but it might be coming. It might be coming. Even if I do like some type of fancy call condor trade where I basically I buy a call and I sell a call and I sell a call and I buy a call, and it creates this little profit rep window, I might look to do that. But is Berkshire Hathaway going to be this crazy safety net because they're sitting in so much cash that they look more attractive? I mean, the market on the S&P sold off 10% to find the 200 moving average, and Berkshire did nothing. That's a great point, Sarah. Yep. I mean, it's sad to say that, but yeah. I mean, he is 94 years old. So I do think that, if and when, I mean, 94 years old, I think is on borrowed time, you could say. But, he has proven that eating See's candy and drinking Coke all day somehow makes you live longer. So I'm surprised that's not every Coca-Cola commercial for the last 2 decades is just showing a picture of Warren Buffett because he's proven that it works. I'm just kidding. Anyway, yeah, I would be not surprised to see there's a change into the guard at some point, and that probably does do some, even though it maybe fundamentally does zero damage to the actual company philosophy, but I think on the optics of that happening, sure, that's going to be a big change. Gap up on TLT, but fading. Let me take a look at the 10-year yield. Going lower, that's encouraging once again. I don't mind seeing that. Obviously, I'd like to see it go to fresh lows around 4.1 or lower. The 10 and the 2, so this is the 10-year 2-year, still inverted. The 10 and 3, still disinverted. So this was a disinversion to reinversion. Mortgage rates, we're going to see if this prints a slightly lower bump in the next maybe 2 to 4 weeks. Futures market, junk has come back. This is good for credit spreads, showing that there's still plenty of liquidity in the market. LQD also coming back. Jobless claims. Here is your unemployment rate. When the heck did this happen? Is that right? I thought we were like a 4.1. There's core PCE at 2.6. Core PCE should be coming out next Friday as well. So we get through this Friday. Any major news tomorrow? Retail sales for the CAD go into next week. I think PCE is on Friday next week. Nope. GDP, unemployment claims, PMI numbers for the Eurozone, PMI numbers for the for Monday for the US. We get. I thought there's. Do we not have a freaking core PCE? Am I missing something? Nothing tomorrow. Okay. I guess we don't have a core PCE for the US. Is it the first week of April? Huh. All right. I guess we don't have core PCE on March like I thought. We have non-farm on the 4th. Tariff talk on it's not going to be officially in the news, but I believe it's April 2nd. We've got the big Q1 expiration on Monday, the 31st. So times are getting more interesting. Let's check China really quickly before we go. Am I still long? No, I got out of that trade. I closed it out this last week. I was in, I issued that. It was in Pulver Alerts. I updated it. I was taking a small loss here for about 30 pips and then up in profit here, up in profit here. Net result was around 200 and I think 90 pips net. So I lost 30 pips on this trade, and then the other ones added up total to 290. So I'm already out of that trade. CAD, Swiss, yen. Let's check the Swiss pairs really quickly since we did cut rates on the Swiss. So today, the 20th, they did cut another 25 basis points. Did that affect currency strength? Swiss is euro, and the euro is just below the baseline level. Let's go to charts here. Aussie Swiss. Yikes. So I'm leveled into Aussie Swiss. I'm in Aussie Swiss here. So sitting on a small drawdown with, and again, this is all intentional. I'm adding in levels, so I'm either getting buy limits getting filled or buy stops getting filled. I'm just going to be patient. CAD Swiss looking a little bit better. Same thing, leveling in, adding some buy limits, adding some buy stops. Euro Swiss got filled on another pullback trade, got some buy stops above. If we pull back deeper, I will add some more. If we have another pullback trade into this level, I'll probably add another chunk, and then I have another one pending down here as well. So buy limits below, buy stops above. Profit target is up higher. Euro pound, I'm out of this trade. Had a couple of winners here. Robot pretty much does most of the heavy lifting for me. But when we were here, I bought it going to the 200 moving average, bought it again, went to the 200 moving average. That's worked out pretty well just on those discretionary trades. This is probably still that type of look. You know, if this ends up breaking out and doing something fantastic, it's, you know, going to be the most boring trend you've ever seen because it moves about 20, 30 pips a day. So if you want to trade like super tight range bound currencies, euro pound tends to be the trick. Obviously that was disrupted in 2016 with Brexit, but other than that, this thing is pretty easy to trade. Yen crosses, you know, love them or hate them. I tend to hate them. New Zealand pair. So Euro New Zealand, Euro CAD, Euro Aussie. That, you know, ridiculous run we saw was not a surprise to see a short-term top. Euro CAD, same thing, short-term top. I think a lot of this move gets faded. So when you go from a low to high, we've already pulled back probably 236. If you're going 382 or 50, see if this finds some equilibrium. This could also be a nice rotation into commodities. But again, it's tricky. You got to go to the smaller time frame, find that confirmation, and then you've got just a swing to trade back to. I would already be looking at being break even or better. If I was shorting on a smaller time frame and get some precision on like a 15 or 30-minute chart, if you're in and you're break even or better, and this is going lower, you're just hoping this thing goes and trails. So I'm not in these trades, but just saying, like, I wasn't surprised after watching a 1,000 pip rip that these are starting to fade. So Euro Aussie, Euro CAD, Euro New Zealand's, I mean, they look pretty similar, right? Pound Aussie, I mean, okay, Pound Aussie faded and right back up. Pound CAD, little choppy. Pound New Zealand, same thing. Like the Aussie New Zealand getting hit hard today. We'll see. I'm not in this pairs for a reason. Like that was a weird run that we saw for that like 6, 7, 8 days in a row. I mean, each one of those pairs were up like nearly 1,000 pips. All right, what else? Dollar crosses. I mean, DXY in the short term may be pulling back. I'm still long New Zealand CAD, still long New Zealand Swiss, yen pairs. Who cares? New Zealand dollar. I closed out of that trade. Dollar CAD still waiting. Dollar Swiss. If we get pullbacks, great. Otherwise, I'm not trading it. I want to see pullbacks into this same area. So 86, 85, 84. I'll look the dollar cost average in. If the dollar ends up breaking above these highs, I think there's room to get up into this pocket. So we could make a run into like 96, 97, possibly even up to parity on the dollar Swiss. This one, I mean, now at a 0.25 Swiss and a 4.25, I mean, that's a pretty good yield to have in the currency market. I know the Fed's going to cut, but they're going to be sitting around 3.75% with a Swiss that's at 0.25. You still get a 3.5% swap on holding dollar Swiss long. I mean, it's not risk free. But if you get some price appreciation in the pips, as well as a 3.5% kicker in the Forex market, that's pretty good. Okay, dollar yen, maybe it's a topping pattern. We have this swing, we have this setup. I'm hearing some more rumblings of possibly a Japanese yen deleveraging. Maybe, if we're going to go another leg lower, then sure, this yen pair, this dollar yen could be a good barometer for if we have a topping pattern. Look for a swing above. I still do not like this trade. I would rather trade Japanese yen futures. I'd rather be long the Nikkei, and I'd rather be long FXY for shares. I don't like the negative swap the last couple of years because I can trade things that are offering positive swap. I try to stick with that. Yen pairs are just super slippery, and brokers charge what seems to be an arm and a leg, even though it's just negative swap. I just hate it. And I say that because I've watched years where it's like, I think it's a good trade and I'm holding on to it. Like I'm comfortable holding on a trade for months at a time. And when I do that and it's just paper cut, financing fees, double, triple rollover costs, it adds up and it just drives me nuts. So that's part of the reason I'm really unattracted to the yen pairs right now. So trading them elsewhere, like in futures or in the actual ETFs that are trading alongside the yen, way more fair. You basically just pay the commission on the trade like a futures commission, and I can hold it as long as I need to for an options trade. FXY just buy shares, it's free. So if I'm right on direction and the Japanese yen gets stronger, I can benefit from that without paying negative swap. So all right. The rest of these are all non-US. I did end up adding some exposure to SCHY, which is a Euro and Asia. It's an ex-US Schwab dividend ETF. So it has about a 4% dividend. I think there's decent appreciation of China. Eurozone continue to do pretty well. Coming back to these recent highs back in 2021 up to maybe 27. I think there's room for this thing possibly to run up into the 30s. So if I bought it around 25, does it get into $30+? That would be a 17, 18% rip. I'd be pretty happy with that. For an index or an ETF, I'd be pretty happy with that. So just some exposure. And then between SCHY, ILF, and EWZ, and some of the Japanese yen, I mean, that's kind of my non-US play. Obviously, I've got some exposure in China. Still have some Alibaba, still have some Baidu, still have some JD.com. And I mean, I've got some of the non-US stuff covered. And then a lot of other trades. So, all right, everybody, I'll let you go for today. Happy Thursday. We'll back and do it again tomorrow. So take care. All right. Thanks, everybody. See you soon. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.